Yo, is OXLC a good dividend stock? Well, we're going to find out in this video. I'm going to break down all the numbers. And if you don't know what OXLC is, or Oxford Lane Capital, they're actually a dividend stock that yields 19.24%. They're actually a BDC, and their market cap is $1 billion right now. And you'll actually get paid every single month with this stock right here. This is one of the highest yielding stocks I've ever seen. Like, check out their dividend history, for example. It was just at 0.75 cents. Now you get 8 cents every single month. And I'm going to show you a bit of the financials and see, hey, is this stock too good to be true? Because all these ones that yield a super high amount are usually pretty risky. So I'm going to go and break down the numbers for you. So right off the bat, they have negative net income in some quarters, but the number you want to look at for BDCs is the operating income, and that's what they pay out their dividend from. So in the most recent quarter, it was 153 billion, and as you can see, it is a massive increases over the previous quarters, and I'm going to show you why. And see, a brand new investor at first glance would be like, okay, the numbers look great on this stock. Look how much they're growing. Let me just buy this stock. But I'm going to show you why it's smart and always important to deep dive into the financials like I'm going to do right here. I'll go ahead and show you this first real quick. Every single quarter, they've been issuing over $200 million, $300 million worth of their own stock every single quarter. And if we go to their total common shares outstanding, it looks like their dividend chart. They used to have 45 million shares 1 year ago. Now they're at 172. So that's pretty crazy. And if we go to see how much their dividend cost them, it's actually $122 million. And they can't afford that. That's why they were able to pay it, because their operating income was 153 million. But it is really risky because they're issuing so many shares. So if we look at their assets versus liabilities, right now they're actually more leveraged than they're at 40%. 1 year ago it was 38%, but they have grown their assets, but they've also grown their debt at a higher ratio, and their operating cash flow is low, but that just has to do with the money they're giving to companies. But yeah, this is a BDC. They're just like REITs. They have to pay out 90% of their taxable income, and I'm actually going to show you another BDC, one that I really like. It is ticker symbol RWAY, and I'm going to show you the financials of this one because you might want to invest in this one instead of that one. This one doesn't yield as much, though. It yields 12.5%, and it only pays out quarterly. But I'm going to show you some of the numbers here because they're quite good. They pay out this special dividend every single quarter, and they're going to keep doing that for the rest of the year and into next year. But as you can see, they're making net income positive. This is the number we want to look at, though, their operating income. And if we see how much their dividend cost them, they had 19 million of operating income. Remember, they have to pay out 90% of that. As we can see, they can easily cover that. And they've actually been buying back some of their own stock. So if we go to their total common shares outstanding, unlike the other BDCs that have to raise capital by issuing shares, the RWAY actually doesn't have to do that. So as we can see, it's down from 1 year ago by 1%, but hey, that's pretty good. Another popular BDC that you've definitely heard of if you're in the dividend community is ticker symbol ARCC. This one's actually at that all-time high level. Isn't that crazy? And since it's at an all-time high level, it's still yielding 9.86%. Check this one out. We're going to look at the dividend history of this one because they have a history of growing it. Like, look, in 2020, it was 40 cents. Now it's 48 cents, and they sometimes issue a special dividend, but they are definitely profitable. Operating income of 320 million. And if we see how much their dividend cost them, it only cost them 253 million. Remember, this is why I really like ticker symbol RWAY. It's also close to that all-time high level. ARCC is issuing shares. As we can see, their total common shares outstanding, it hasn't gone up like crazy, though. You got to give it to ARCC. They're doing great over there, Ares Capital. It went from 496 to 557. So it's up 12% from 1 year ago. But hey, you're getting a 10% dividend yield with this one. Market cap of $10 billion. So out of all the BDCs, this one's very safe. And actually, what's really cool is there's an ETF that combines all of these. It's ticker symbol BIZD, and this one's at an all-time high. This ETF yields 10.52%. And if we go to their asset allocation, as we can see, Ares Capital is 20% of it, and then some more that you probably haven't heard of, but they're all very safe. I've looked into a lot of these. So I really like BIZD. You'll get that nice 10% dividend yield. And if we go to their total assets that they have, as we can see, it's steadily rising every single quarter. 1 year ago it was 450, now it's 737. So quite a consistently good growing ETF. Yeah, if y'all like this breakdown and like my perspective, I really would appreciate if you'd hit that subscribe button if you haven't already. We're trying to get to 1,000 subscribers, and if you look at the number, we're getting pretty close. Also, don't forget to hit the like button. That helps out too. Check out my previous videos, and I hope you guys have a great rest of your day.